So, let's talk about the winning streak. And Rima, who would have thought, really, that it's going to be IT to the rescue? But that's exactly what's played out today and yesterday.
Indeed. So, I think the question everyone is having is that why is IT going up, right? TCS, HCL, WIPRO, all of them have reported muted numbers. Two of them, WIPRO and HCL Tech, have reported a revenue contraction. For TCS, it's absolutely no growth. Pull up the constant currency quarter-on-quarter revenue picture and you would see that this has been a muted quarter. It's played to the script. So the question then is that why is the stock rallying? Now here we can only conjecture. We do not know what's in the market's mind. But one thing could be that the demand environment has not materially deteriorated. It's similar to what it was in the March quarter, which means that it's not improved, but it's not significantly worsened. Now, HCL Tech, after reporting a big miss in Q1, has guided for a recovery in Q2, even in the troubled verticals of tech and telecom, which is why they're confident enough to hold on to their full-year guidance, though the asking rate, that means how much they need to deliver in Q2, Q3, Q4, goes up. But HCL Tech, for now, is holding on to the guidance. WIPRO's next quarter guidance, it's still very muted, no doubt. In all probability, the company will end in the red. It'll contract -2 to +1%. But this is not the most bearish estimate on the street. There were brokerages who anticipated a revenue guidance decline of -3 to -1%. So again, WIPRO's Q2 guidance in a way is not the worst. It's slightly better than what the street was anticipating. And then there is that flow through of NASDAQ. NASDAQ has seen a 3.3% rally so far this week as interest rates, the expectations of further interest rates, start to cool off and subside. So there is that rub-off impact which you are seeing in India. And then another point, from the March lows, Indian IT has not participated to the same extent. While the Nifty has seen a rally of levels of by 15%, the Nifty IT index from the same March low, 28th of March, has seen a rally of only about 7%. So the Indian IT has outperformed from the April lows, but if you compare it from the time when the Nifty, the big mid-market rally started, IT has not participated so much. And then the final point, valuations are similar to what they were in the last 5 years. So unlike many pockets of the market which are perceived to be expensive, IT's valuations are not very expensive. So that's what I've inferred after talking to a lot of market, trying to understand, what explains this kind of exuberance. Why is the market forgiving all the negative news that we've seen on the earnings front? That said, the analyst community, the ones who write all the brokerage reports, the sell-side notes, they're still very cautious on the stock. If you pull up on WIPRO, which is the latest one to report their numbers, most of the brokerages have an underweight call on the stock because the growth itself has been lacking. But the management is still very optimistic. Listen in to the conversation that we had with the management yesterday.
The reality is that, we continue to have a market where there's a demand for technology, where we have deals, where we actually sign more large deals than we used to sign in the past, and also a market where there's a reduction of discretionary spend across industries, in my mind. Now, with some industry probably more impacted than others, the banking, financial services sector, the communication sector, the technology industry, certainly. So I'm not sure, Rima, would necessarily say that the market is worsening. I think we continue to be in this market where there's a certain level of uncertainty that drives some of the behaviors of our clients to be a little bit cautious when it comes to discretionary spend. The nature of a slightly more volatile market is that decisions can come at any moment in time. The reality is today we are not necessarily seeing it, but we are not equally seeing any deterioration of the situation. It is more or less the same market that we have seen for the last, I would say, 3 to 6 months.
It was operational improvement that drove the margin performance, where we kept margin very stable even when we had a certain amount of softness in the revenue, and in fact improved utilization, improved overall execution of our projects, and so on and so forth. So we do have sufficient levers that one can continue to engage in to deliver a stable performance around the range that we operate in.
That's another thing, right? The WIPRO management also saying that margins will remain stable from here on, which means they will not decline. And that's also important considering that going ahead in Q3, there will be a wage hike, which depresses margins. Yet, the management is saying that margins will be held at current levels of 16%. So that's also another important indicator, right? They're doing whatever measures they have to do to optimize their costs, bring it down to ensure that margins don't fall despite, the wage hike impact.
Okay, that's WIPRO, and that's the management commentary that we got. We do have to take a break on that note. On the other side, we'll put the spotlight on a whole host of buzzing stocks.